Welcome to the SeizeYourBusiness.com podcast and video blog. My name is Kevin O'Flaherty from O'Flaherty Law. My co-host Jim Wazak couldn't make it today, but we are joined by Jeff Burgess from Preferred Financial Partners, and we're going to talk today about everything you need to know about disability insurance for business owners. So thanks so much for coming in today, Jeff.
Yeah, thanks for having me.
We're at our Naperville Business Lounge. It's in downtown Naperville, and it's our little private bar and business owner hangout. So stop by if you're in downtown Naperville. But so tell me a little bit about what I need to know as a business owner about disability insurance.
It's a loaded question, but we'll kind of go over some of the basics. May is actually Disability Insurance Awareness Month, so I figured it'd be a fitting topic to discuss today. So in general, nobody likes to have the insurance talk, right? Whether it's life insurance, health insurance, disability, long-term care. Most people relate to the investment side, right?
Sure.
I want to put my money in the market, and I want to grow it, and I want to see those
exciting.
number get bigger and bigger and bigger, right? It seems to be a little more tangible for people, so they can relate to it a little bit better. The insurance piece, whether it be even something as simple as automobile insurance, you don't see the value in it until it actually kicks in or pays out, or
And then it's the most important thing in the world. If
exactly.
You
then you're glad you kind of had that conversation and you put the coverage in place. Ask anybody who's been in a car accident that making those monthly premiums wasn't ever fun, but when they got rear-ended and they got their bumper replaced and car repainted, it was worth the monthly premium. So.
Sure.
With that, I think it's still extremely important to have some of the protection plan in place, especially for business owners. When you consider that outside of their immediate family, that is truly their baby, that's their life, that's everything they've worked so hard for. So why not put some protection around it? I ask a pretty simple question in the beginning of a meeting, which would be, what's your most important asset? What's your most valuable asset? So if I were to ask you that, you are a business owner, correct?
Sure.
So what would you say your most valuable asset is?
Well, the business itself. I know the answer you're looking for is probably the ability to continue working, right?
Basically. Typical answers I get would be my car, my house. Some people say my education. Some people say the shoes I bought last week, or that cool purse, or whatever it may be, which are never wrong answers. In my opinion, you could probably make a very strong argument that for anybody, their most valuable asset is them, right? Your ability to wake up every morning, go to work, put on the suit and tie, and produce that income. If you took that out of the equation,
sure,
what are you truly left with? Now, of course, there are certain business owners out there who are the kind of old school traditional business owners where they're sitting behind the desk. I imagine their feet are kicked up on top of the desk and there's the cigar in the mouth and they're just counting their money, right? But as well as I do that just doesn't really exist anymore. Business owners are employees of the company as well. They're working hands-on. So when you think about taking that one really, really important aspect out of the picture, again, what are you kind of left with? So, in talking about that, there's really kind of three capacities that disability insurance works crucially in the protection planning piece for business owners.
Hawks fan.
and yes, that is my Blackhawks ringtone.
We're always glad when people get calls during the podcast because that means they're busy. There's action happening in their life.
But it's sad because I hear the Blackhawks ringtone and then I remember that they got eliminated.
Not the best year for them. They've had their fun. I'm a White Sox fan. This is true. It's going to be a while for me.
Yeah, likewise. And we could talk about that with the acquisition yesterday with the minor leaguer.
Louis Robert.
Nobody
knows how to pronounce it.
Robert, yeah. We'll have to come up with a nickname for him, I suppose. So like I said, really three capacities that the disability piece can be crucial in just the overall basic planning of a business owner. So the first way would be really kind of the most simplistic, most obvious, that doesn't just apply to business owners, but it applies to really any working professional, and that's just replacing your income straight up. So really how that works is, roughly you're going to look to about 60% of income replacement. There's no policies or plans out there that would ever replace 100% of your income. If that were the case, there'd be probably a lot more fraudulent claims, and nobody would really have that incentive to get better and get back to work. So roughly, you're going to be able to replace about 60% of it. There's a difference between if it's employer paid versus employee paid. So if your employer's paying for it, that means they're taking a tax break when they pay those premiums every month. And if the benefit were to kick in to you, then that income would be taxable to you. So let's just say you have a group disability plan. I own a corporation. You're one of my employees. I pay the disability insurance coverage for you, and it's going to replace 60% of what you make. So if you made $100,000, then you became disabled and you couldn't go to work after the elimination period, which is basically how long you need to be disabled for before the benefit kicks in. Once that elimination period is over, you start getting your paychecks. So on $100,000 with 60% replacement, your gross would be $60,000 salary if you were, disabled for a full exact year. But again, that's taxable to you. So when you factor marginal tax brackets, maybe take off another 15 to 20% for taxes, and you're left with $40,000 to $45,000 in your pocket. So
is there any upside to the employee of the employer paying for it, other than the fact that the employer is picking up their premium? So, like, if an employer says, "All right, I'll reduce your paycheck and put some of this toward disability," and call that us paying for it, the employer gets a tax break. The employer wins, but the employee is paying taxes on it now, where otherwise they wouldn't be, right? If they paid it on their own.
Yeah. So the benefit in that scenario to the employer would be, one, the tax break. I mean, when you talk to any big corporation about saving money on taxes, that's kind of a no-brainer, right? Employee retention is probably the biggest benefit to that employer, that business owner.
Yeah, the benefits to the employer are pretty easy to see. I'm wondering if there's any upside to the employee, because if it's a two-way street where it's like, yeah, it's good for the employer to pick up and pay for it, but it seems like there's a tax detriment to the employee if the employer's paying for it. Am I right about that, or am I missing
Absolutely.
something?
So, you could go down a crazy bunny trail and outweigh or try to weigh the benefits of receiving the taxable benefit versus having the free coverage, right? Because I'm your employer, I'm paying for all of the benefits. I mean, if you never get hurt, become disabled, and trigger this benefit, then it's an extreme bonus to you, right? Because you've had this coverage the entire time, zero cost to you.
Oh yeah, and if it's truly a icing on the cake for the employer, where it's like, I'm just, I was paying you this, now I'm going to pick up disability, no cost to you. It's not coming out of your paycheck, and
Exactly.
But it wouldn't be a situation where, like, some things like health insurance, the way I understand it, you can say, all right, it benefits both of us to reduce your pay, have the employer pick up the health insurance, but the employer's paying for it, but the employee's really being paid less in salary, because there's a certain amount that an employer is going to pay for an employee regardless of where it's going. But there's not really something you can sell the employee on if the employer is basically reducing their paycheck to have the employer pay for it.
Yeah, and sometimes it's not always a reduction in pay to receive that fringe benefit. But it's almost become one of those things. I mean, especially, if you're a female and you're, growing your family or starting your family, you're going to have time off, right? Or maybe you have hobbies, or you live a lifestyle where you're maybe a little more prone to getting hurt. I mean, the short-term and long-term disability have almost become one of those benefits that is basically expected to be on the table, right?
Okay.
I mean, a few steps below health insurance, right? If you went into this great job and they impressed you, and it was a really nice salary, everything you wanted to do, but they weren't going to offer you health insurance, you'd kind of be a little confused by that, because health insurance is just assumed to be available across the board. Again, we're talking about not the mom and pop shops, but really anything companies. A little bit bigger. So the disability insurance has almost become kind of in that same category.
Okay.
Where
I didn't know that was that prevalent.
Yeah, I mean, for the most part. The other thing too is, the employee retention. Yes, it's nice to be able to offer it to entice somebody to come work for you, especially if it's a competitive marketplace out there. So if I'm looking between Apple and IBM, and it might just be a difference in their benefits package, right? That's 37%, I believe. Don't quote me on that. As far as somebody weighing in their factors, 37% of it is weighed towards the benefits that are offered to them. Salary, location, all those other things are factored in as well. So yeah, I think it has become something more like health insurance, where it's basically it's standard that it should be available to you. So with that, like I said, that's kind of the first capacity. Now we gave the example of I'm the corporation owner or the corporation itself. You're the employee. Let's take that the next step, which would be I'm the small business owner and you're an employee of mine. So that kind of works the same. However, as I stated before, the small business owners are also employees. Mm-hmm. So in that sense, if I'm hurt, I'm not only an employee of the company, maybe working side by side with you, right? I mean, you can definitely relate to that in your own line of work. But two, I'm also doing all the behind the scenes stuff, right? Mm-hmm. That needs to keep this well-oiled machine, keep chugging. So, obviously you have secretaries and ops managers and things to help you do that. But if it's not that brand of you behind it, then how much is it really worth? So that's where disability insurance plays a huge part in the business owner planning side, as far as the protection planning, of course, where it's, if I'm the business owner, I just think of, let's take you out of the equation 2 weeks ago. How is your business running? And not only how is your business running, but how are you paying your bills? You still have to pay the mortgage, and you still have to eat, and utilities, and put your kids through school and all that good stuff. Those bills don't stop just because your income stops. So being able to make that replacement can be pretty simple. A lot of people, once they grasp the concept and the importance of having this in place, typical questions I get were, okay, well, how much does it cost me? What's the benefit expected to be paid out? Things like that. So really, to answer that, this is a public service announcement, I suppose. So your the premium, so what it costs you out of pocket for a standalone policy, not the group policies that we've been talking about, but a true standalone policy, is dependent upon your occupation. So there's a thing called an OCC class, which is just short for occupation class. Most companies have a rating system from 5A to 2A for the most part, and some have a 3A and a 3P, or a 4A and a 4P, depending. But basically, they are assessing the risk of what you spend the majority of your time doing, which is working, right? I mean, 40-hour work week, that really doesn't, that's almost like part-time now, right? That doesn't really exist. So you could argue that outside of sleeping, most of what we spend our time is working. So basically, the 5A, the highest rated occupation classes, those are going to be typically, your accountants, your attorneys. Picture somebody sitting behind a desk for the most part of their day, right?
Not a whole lot of risk.
Right. And not that the disability insurance is only effective if you get hurt at work. I don't want to confuse that with workman's compensation. But again, they're just boiling it down to, what do you spend most of your time doing? They can't sit here and nitpick, what do you do on weekends and what do you do in the summertime and things like that. So those are your 5As. Doctors, chiropractors, dentists are kind of your 4As. Guys like myself in the financial world are probably 3As, only because we do a lot of traveling, and we like to have fun every once in a while. And then you kind of have you start to fade into some of your blue collar workers. So the benefit is based on your occupation class, and then it's based secondly on your income. So if you make $100,000, you don't have any coverage. Let's say we're going to pay out a benefit of $4,000 per month. That's weighed against your age and your occupation class, and then that determines your premium. So the example we gave before, where you had this group plan in place, but I was your employer, you were my employee. I was covering the premium payments. It was paying you 60%, but that 60% was taxable. On the flip side, to the business owner where it's a true standalone policy, I'm paying the premiums myself, okay? I'm not taking a tax deduction on myself because typically in a numbers game, it doesn't work out best for me to take that upfront tax deduction. So when the benefit does kick out, that 60% or $60,000 in that scenario is not taxable to me. So there's a little bit of upfront tax benefits when you kind of factor that in. So that's really kind of the first dimension that the disability insurance is important to business owners. Okay.
Well, we may have to have you come back for some more a second podcast because we're a 15-minute podcast. You got two more dimensions to talk about?
Yeah, see, the other two are pretty quick. I mean, really, like I said, if it were prioritizing things, that would be the first sure. discussion we would have because that's truly what's most important. As important as the business might be, maybe it's a family-owned business passed down from generations. Life isn't worth much if all you have is the business, right? You still want to have your family time. You still want to have your house and food on the table and put your kids through school, things like that. So that's why we would prioritize that as number one. The second one would be is BOE or business overhead expense. And really what that is purely for the business owner from a business owner standpoint. So as we said before, yes, they are also an employee of the company, but they're making all the important decisions. They're paying the bills, things like that. So the business overhead expense has nothing to do with how much income the business or the business owner is making. That's truly just what are my fixed costs to run this shop. So there's a lot more on the underwriting side, unfortunately, that goes into that is documentation of how much rent costs and supplies and wages.
So that's probably a cheaper insurance because you're not looking at the income, you're looking at I guess it depends on whether the overhead is more than the income.
Exactly, it depends what kind of shop you're running because now maybe some of those blue collar workers who weren't making as much as some of the white collar workers, they might have more expenses, right? Maybe it's a construction company and they have all this large equipment, so it depends, and you could even argue liability, insurance, things like that they have to cover to keep the business in motion. So really what that says is if the business owner becomes disabled and can't perform the functions of his job, that at least the expenses of the business are covered, and really that's just a benefit to the rest of the employees. Okay. So if I was the business owner, you were on my staff, I get hurt, well, maybe I didn't have any disability insurance on myself, but I had the business overhead expense. The shop is not going to have the lights turn off one day.
Gotcha.
We're still going to be able to hopefully generate an income. You're still going to get a paycheck. You're still going to be employed, right? That's pretty important. But it doesn't pad my wallet any more than that.
Sure.
So that's really the second dimension that it would work in. And again, we're getting a little more intricate as we go down further, but really the last place would be in a partnership type of agreement, whether it's 1, 2, or even more than that, partners involved. So it's similar to if anybody out there has ever heard of like a buy-sell agreement, where that's through life insurance specifically. This is basically works the same way, but with disability insurance. So if you and I are business partners, I have a disability policy out on you, you have one out on me, and if I become disabled either temporarily or permanently, my benefit would be paid to you. So you could basically eventually buy me out of the business if it were a case of I'm permanently disabled. Then you get in some of, obviously, to the legal side of things where, maybe the business goes to my spouse, but you don't want my spouse to be your new business partner, just completely inherited.
Buy-sell clauses.
Exactly. So that's kind of where that comes into factor. And that would basically be a mix of the two where it is income-based as well as expense-based when you're factoring how much things actually cost. But again, to prioritize, it's really just the basic disability insurance replacement. Then it would be the business overhead expense. Then you would get into any of your buy-sell agreements if there is any sort of co-ownership within the business.
Yeah, well, Jeff, thanks so much for sharing your wisdom on Disability Awareness Month.
I try my best.
How can people reach you if they'd like to talk to you about wealth management, insurance?
Yeah, absolutely. Preferred Financial Partners. We are, a holistic, fully open architecture firm. So we help people from the beginning stages all the way to the end. Best way to contact me would be cell phone, 630-254-0609. Or if you ever have a question, want to pick my brain, or you're just more comfortable emailing, it's jburgess, that's BURGESS, at financialguide.com.
And you can reach me at 630-324-6666. That's 630-324-6666. We offer free consultations in almost every area of law. Go to seizeyourbusiness.com for more of our podcasts and video blogs. We've done over 100 of these now. We've hit almost every topic relevant to business owners. You can go to learn-about-law.com for articles, podcasts, and videos about almost every legal topic. And then our new podcast and video blog is makingrealestatefun.com. Thanks so much for listening.